This chart shows the S&P 500 index in 1994 after the Federal Reserve pause. It is true that almost everything is different from 1994, but one thing may be similar, and that is soft landing. So is it a good time to buy stocks? Before that, we have to answer 3 questions. 1. Does the Federal Reserve plan to raise interest rates or not? After November 8, 2023, the Federal Reserve has not announced any plans to raise interest rates, although it has threatened to raise rates again, if necessary. After 2 pauses and the tone of the Federal Reserve in recent months, it seems that the Fed's work is done with interest rate hikes. But it takes time to see the full effect of the interest rate increase, and the Federal Reserve wants to keep risk aversion in the market until it sees this impression. However, there are also concerns that the increase in purchases in the final months of the year will push up interest rates more than expected. So if the Federal Reserve is done raising interest rates, they announce a pause? When will the Federal Reserve announce a pause? The timing of the pause is not clear, even for the Federal Reserve, but there are 2 signs that we can understand that we are approaching the time of the pause. The first is that inflation will continue its downward trend and move closer to the Federal Reserve's 2% target. The second is the economic recession that will force the Federal Reserve to stop fighting inflation. We don't see any signs of recession at the moment. The demand for labor is still high and the consumer is still willing to spend a lot. Of course, the flow of both of these elements is declining. The main purpose of raising the interest rate is to slow down the economy. To slow down the economy, it is necessary to increase the investment risk, so that producers and consumers have less desire to spend. As a result, inflation starts to decrease. And it is very important that producers and consumers remain under this pressure until the inflation target is reached, and announcing a pause means reducing some of that pressure. It is possible that the members of the Federal Reserve have concluded that there is no need to raise interest rates. But inflation is still far from the 2% target, and the Federal Reserve needs to keep the fear of rate hikes high. So is now a good time to buy stocks until the Fed pauses to make good profits? The more important question is, if the Federal Reserve announces a pause, will stocks go up? Past data shows that when the Federal Reserve announces a pause because inflation is approaching its 2% target rather than a recession, stocks have performed well. The Federal Reserve announces a pause when it is confident that inflation is close to its 2% target. And the interest rate puts a lot of pressure on stocks. And if the Federal Reserve announces a pause, some of the pressure of concern about rate hikes will be taken off stocks. And until the pause, treasuries are much more attractive than stocks. Stocks will find the future more attractive when the Federal Reserve announces a pause. And also the announcement of the pause means to the market that the rate cut is in the near future. And as a result, risk tolerance increases. Finally, is it a good time to buy stocks? Good time means different things to different traders and investors. Currently, investing is very risky, and if you want to buy a company's shares, you must have good knowledge about that company and have a long-term vision. There is still the possibility of a further rise in interest rates and a recession. All of the existing risks have put a lot of pressure on stocks in the short term, and there is a possibility that stocks will see lower prices. Finally, when the Federal Reserve announces a pause, if the economy is not too damaged, stocks are probably in good shape to buy.